Welcome back, and joining us on the show now is Chirag, Sheth of Metal Focus. Chirag, hi. Almost everybody seems to be talking about on the importance of having gold in your portfolio. I mean, every Wall Street bank and brokerages is putting thrust on the fact that gold should be a part of portfolio because central banks are buying it and the way the economies are doing. What is your sense? I know you're coming out with a report pretty soon, almost a week from now. How are you looking at the kind of demand that we've seen also for the month of May? The first quarter of the calendar year, of course, was on the positive side.
Sure. So look, having gold in a portfolio is an important one, something that Manisha, you and I would discuss multiple times in your show. I think what obviously depends is how much you have it. Now, that can range between 5% to 15% depending on the economic cycle that we are in, depending on how your own portfolio is structured, and there are multiple studies by World Gold Council and various agencies. I think what is now happening is that why this is being talked about is the increasing amount of geopolitical tensions and volatility that we are seeing in many asset classes. There is an increased stock of that a good portfolio should have gold. But otherwise, if you've seen many Asian countries, people have always been investing in gold for many years now.
Chirag, going forward from here, what are a couple of things that the street will watch out for? I mean, we all are looking for the US Fed meeting. The geopolitical tensions are right there. And then a huge amount of buying, not just by the global central banks, but the gold jewelry buying from China numbers also have been higher there. Do you see this trend continuing?
No, absolutely. See, I think what is now very interesting is market is so much driven by two things. One is the data that is coming out of Fed, and another side is geopolitical situation. So every time there is a geopolitical event, you see market actually building geopolitical premium. However, if there is a data point which comes in which is negative, there is a bit of correction which happens, but the correction does not wane away the entire geopolitical premium. So every time there is a positive news that comes, the base keeps on going higher. Now, what is very interesting is that at higher levels, and something that I was speaking to one of my clients, and this is an interesting thing. When prices went from $2,000 to $2,300, many of us actually felt that this rally was a bit overstretched, and there should be a correction which should come in. However, as markets started spending times at the higher levels, physical market also started to adjust, and we saw that Akshaya Tritiya was very good in places like Vietnam, Thailand. There was strong demand. So at higher levels, physical market has now started to support the prices as well.
Chirag, what's your sense on the gold prices going forward from here? Because most of the reports still suggest that 2,500 and levels like perhaps 2,700 are also on cards for this year itself.
No, I think over the next 12 months or so, 2,500, 2,600, very much a possibility. However, we would suggest a correction should come in if you want a broader participation. But that can only happen if prices sustain below 2,300. Then you could see $100, $150 correction. But unless until prices do not break 2,300 and trade below that, any sharp correction or meaningful correction is difficult to be seen.
Chirag, what's your sense on Indian buying then? Because the first quarter of this year saw good buying, stronger imports as well, even as the prices were running up. Are we getting a sense of that in this quarter also?
So I think to start with, the April import numbers were, I would say, a bit muted. We saw, about, I think, 46 tons of gold imports coming into the month of April. However, obviously, on a year-on-year basis, if you compare, this is much better than what we saw last year. Indian consumers have started to adjust to higher prices. Akshaya Tritiya was exceptionally good when you look at the way prices have behaved. So I would say this quarter looks good, but usually, you are aware, Manisha, May, June are pretty soft in that sense because a lot of demand from rural India actually slows down. So year-on-year, we might still do a bit better when you look at elevated prices.
Oh, well, absolutely. Chirag, thank you so much for joining us. So, well, yes, gold buying is a great idea because while we are looking at some correction, as Chirag says, the expectation across segment is that you could be looking at 2,500 kind of levels on the higher side as well. I mean, that's the kind of report we've seen coming from UBS, ANZ, Citi, Bank of America, everybody anticipating that gold prices from here could be making higher highs for this year. So having that in your portfolio perhaps is a great idea going forward. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.